Hello everyone, Paul Rogers here. Today is January the 24th, 2018. I want to take a quick look at the technicals regarding Bitcoin, Ethereum, and Dash. Let's start with Bitcoin. So we're looking at the daily chart, and the trend channel is held up perfectly. I actually expected price to push down a little bit further. I was expecting to get one of these big, long shadows, but we haven't had that yet. Price basically just kind of kissed the trend channel and then went back up, kissed it again, and went back up. So what this means is a lot of traders are drew the lines, are seeing the same thing that I'm seeing, which is good. You want something that looks very obvious from a technical standpoint. If you're drawing exotic patterns, if you're looking for exotic patterns, and most traders aren't seeing that, well, guess what? That means most traders aren't going to be putting their buy orders there or their sell orders there. The more obvious a pattern is, the stronger a pattern is. Or I would say that the higher probability that it's going to actually come to fruition. And the larger time frame you're on, if you're on the daily or the weekly or the 4 hour, it's much stronger than if you're looking at a 5 or 15 minute or 30 minute. I mean, look how different things look on the 15 minute. If you're looking at the 15 minute, I mean, these little patterns that you see and resistance and support and everything else doesn't hold up very well. You really need to pull back a little bit in order to see what's happening. Like on the 4 hour, you can see a pretty well-defined trend channel. On the 1 hour, I mean, you can see one high point here, but it's really hard to see things if you're zoomed in. And so that's why if you're looking at like the 15 minute or 5 minute and you're trying to trade the 15 or 5 or 30 minute time frame, there's a high probability that things aren't going to work out. If you are looking at the daily and you're seeing daily support and resistance levels, then those are really, really strong support and resistance levels that you can trade off of. So there was enough support to bring Bitcoin up, but the reaction isn't super strong, as you can see. I mean, price did bounce, but it didn't have a significant bounce. So, I mean, this is what I would have preferred to see, is a strong movement down, a bunch of buyers step in, and price kind of shoots up higher. This still could happen, but what's going to cause price to kind of start shooting up is if price action creeps up higher and higher and people that were thinking about buying down here around 9,000 get FOMO. They start to worry that, hey, I missed my opportunity to get cheap Bitcoin, and Bitcoin's prices keeps going higher and higher. Exactly what happens here. Look at this. I mean, that FOMO caused this huge spike. It's people going and saying, oh, I'm not going to be able to get in at 5,000. I'm not going to be able to get in at 6,000 anymore. Oh, price is already at 12,000. Yesterday, price was at 10,500. Every day I wait, I'm losing money. And then people freak out and they buy right away. In order for Bitcoin to bounce up higher, we're going to need some FOMO for that to happen. Unless Bitcoin goes and makes another attempt and pushes lower to this previous trend channel, then there'll be so many buyers will step in here that price will have kind of like it'll just bounce up and it'll have enough momentum to actually go and challenge this upward trend channel again, which I would actually prefer. I would prefer if Bitcoin would head down to 8,700, 8,800, have a whole bunch of buyers step in, hit the 30 RSI, which is a huge bullish buy signal, and shoot up, versus this kind of light little bounce, because right now there's there's not much conviction behind the buying. But either scenario I'm fine with. I mean, if we have to FOMO our way to higher ground, that's cool too. That'll work. Ethereum, I bet I could draw a triangle pattern here pretty easily, and I'll do it right now. Let's see if I can't draw something decent. All right. There's a number of people that could be looking at something like this, some sort of a triangle. If this is the case, most likely Ethereum will get pushed back down. I would say if Ethereum gets above, I don't know, maybe around 1100 or yeah, 1100, we'd probably have a decent confirmation that this triangle, I don't know if I'm, I mean, it's a little bit sloppy the way I'm drawing it, but if Ethereum does get to 1100 or so, I would say this triangle's been broken, and Ethereum is going to be on a uptrend again. This is also another pattern I'm seeing here too. It's called a Gartley pattern, which like mimics animals. And it kind of looks like if it goes up here, depending on where it goes, if it comes around here, it could be like a bat pattern. Anyway, I'm just remembering that there's all these funky patterns that you can draw. And it kind of really depends on how high this goes. I guess we'll have to look up that pattern and see. And then they say, okay, it's most likely going to break down, most likely going to break up. But these exotic patterns and stuff, they're more for fun. I don't think they actually hold much water, because how many traders are actually drawing exotic chart patterns? People are looking for things that are well established, that are easy to read, like triangle breakouts, trend channels, moving averages, RSIs. That's what people are really looking at. Divergences, volume, those are the things that matter. Doing exotic chart patterns, you know, they don't come true as often because less people. I mean, here's a good question: why does technical analysis even work? Why is it even worth messing with? Well, what makes technical analysis work is that traders and algorithms are programmed based on technical analysis. So we make it real. We make it real. If no one was drawing trend channels and no one was seeing patterns, more or less, there wouldn't be patterns, really. What happens is, I mean, it starts with just a simple thing. Like, imagine something's moving around in a range between $30 and $50. Let's say it's coffee. And for whatever reason, coffee sells for a bag between 30 and 50 bucks for a big bag of coffee. If you are a producer of coffee, you're going to want to go and make sure that you try to sell around 50. If you're a buyer of coffee, you're going to be looking to purchase around 30. And right then and there, just with that mentality, you've created, and other people will create, a support and resistance level. And that's technical analysis. It's, oh, this is the price range. It's advantageous for me to buy at 30, or it's advantageous for me to sell at 50. And everyone's thinking the same thing, and guess what? Now it exists. That's technical analysis. On my channel, there were some comments of people questioning technical analysis. Like, hey man, you're looking at these charts and I don't really think it's for real. I think what you're drawing is just not criticizing how I'm drawing things, but more that technical analysis doesn't work, doesn't exist. Well, if you're drawing things on the 5-minute or 15-minute or 30-minute, I agree with you. You're probably going to think, oh, things don't hold up very well. Okay, if you're drawing things that are very basic, that everyone else is seeing on the daily, then yes, more often than not, technical analysis will serve you very well. If you get exotic and start doing these exotic patterns, start talking about animal patterns, which, if you talk to someone in technical analysis, they'll know what I'm talking about. These Gartley patterns, right? They're exotic patterns, and the chances of them actually materializing are much, much lower than a well-established trend channel or well-established previous support or previous resistance on a long time scale. So there's my rant on technical analysis. So anyways, I know Bitcoin's going up. I don't know what's going to take it there. I don't know if it's going to be a really strong downward movement to where we get a whole bunch of buyers projecting it higher, or if it's just going to slowly keep going up and people start to get FOMO and that pushes it higher at an accelerated rate. Ethereum, I want to see Ethereum above 1,100. At that point, I'll say, okay, I'm starting to see that if other people are looking at this triangle, the triangle will definitely be broken there. Our good friend Dash, Dash is a good buy right now. Dash is a good buy. I'm glad Dash went all the way to 650. I hope some of you bought at 650. That's a clear as day, great place to purchase from a support and resistance standpoint. Dash is going to be heading higher for sure. So I'm bullish on Dash. I'm bullish on Ethereum. And Bitcoin, Bitcoin I think is going to underperform compared to those two this year. But I still think Bitcoin is a major trading pair. So, Bitcoin goes down, most of their alts suffer too. Bitcoin goes up, usually everything else gets dragged up one way or another after it. I mean, if Bitcoin goes on a huge run, money gets sucked out of alts into Bitcoin for sure. But that money eventually trickles back into alts. So it's all interconnected. The main thing is that people don't pull their money out of cryptos and go into like Tether or US dollars or pounds or what have you. So anyhow, I hope you all are having a good day. Paul Rogers out for now.